Good morning, everybody. Welcome back to another session. Monday morning scalping, day trading the NQ on the New York Open. How's everyone doing today? I'm going to just get a screen up real quick. Good. Ooh, what's going on here? Why is that not working? Here we go. Entire screen. Cool. There it is. All right. Con, hi to you. Good day. Cherry, good to see you. Thomas, good morning to you. How are you all? Oof, we just opened another heavy open. I could potentially, one moment, let me just get this up and move this to the side. Good morning, Sebastian. Amar, good afternoon to you. Omar, good morning as well. Good to see everyone in the chat. Hope you had a good weekend. What did everyone get up to? Anything good? Oof. Well, this open was, oof, that happened quick. I'm just going to up these. Also, for everyone watching, later on today, 6 p.m. UK time, I'm releasing a volume profile video, an in-depth volume profile showing you how I mark up my zones, because I know a lot of people were requesting that. So yeah, that's coming out in 3.5 hours. That's going to be released. So Kyan, hi Sam, hope you're healthy. I'm doing okay. I'm a bit sleep deprived today. I had a migraine all night, so I got about 2 hours of sleep, but I'm dosed up on coffee. My migraine's fine. It's gone now. I feel all right, but I'm probably going to pass out a bit later, go to bed really early. It's going to be one of those days, but I feel okay right now, so that's all that matters. But thank you for asking. Hope you're well as well. Okay, we're kind of coming back. I mean, just look at all those buyers that were trapped. I do want to see what happens when we get to this area here for a potential short, or buy at the bottom here. So 2 areas where we could play off each other. But we're dead in the middle right now. So until we get to one of those areas, I'm not really going to be looking for anything. Mohil Bali, could you please make a video on absorption? Also, please make a video on how to draw levels like you do. So yes, Mohil, I've like I said, in about 3.5 hours time, 6 p.m. UK time, a video on the volume profile and how I draw my levels is being released. A video on absorption is being worked on. So all that stuff, all coming out. I've got a bit more time now where I can make a bunch of videos. So I'm really making use of the time now. So all coming out. You'll be glad to know. But yeah, keep your eye out for later today. That all the levels, that video is coming out later today. I just want to double check because I've got a zone marked out on Trading View, but I don't have it on Project X. That's why I marked it wrong. There it is. Now it makes sense. Okay. See, always double check your zones. Sometimes, you just draw them out and you realize you drew it wrong. So yeah, that's now making sense with Project X. Okay, that's looking good. And then we've got another zone down here. These are okay, but I'm expecting something, at least a scalp off them. And there's another one right down there, but I'm not going to bother marking it out yet because the likelihood of getting down there anytime soon is slim. So, but if we get towards that area, then yeah, I'll draw that zone out. So how's everyone's weekend? Today I'm expecting it to be a bit of a boring session. I'm not going to lie. There's no news today. I mean, we had durable goods, but it's not really, it's not really high impact. So, but apart from that, today might be a bit of a range day. Who knows? But we're starting to approach that area, so potentially we have a trade. Tomorrow, though, we do have Trump speaking. Now, it's listed as an orange folder, but he is due to speak about the economy. So I would put quite a bit of emphasis on that. You never know. And then Wednesday is a big one. We got FOMC, big one Wednesday. Thursday, unemployment claims before the open, nothing too crazy. And then Friday's a dead day for the most part. I mean, you got PPI as well, but yeah, FOMC is the big one, obviously. So yeah, let's see what happens. Let me read these comments real quick. How do you read and use the order on the right side of your screen? The depth of market, truth be told, Mohi, is it Mohi Bali? Yeah, Mohi Bali. I don't really use it much. I only, like, for example, oh, you missed it there, because it happens so quick, you can't really make sense of what you're seeing half the time. But the only time I would really kind of glare at it is on very obvious highs, lows, areas where you expect there's going to be a lot of, take profit levels, things like that. I'll see if there's, actually any real volume in the book. But because the majority of the volume in the book is all hidden, this is the problem. So it doesn't actually help you that much. But it's good to kind of just have and glance every so often. Because most of these are iceberg orders, and I will do a video on iceberg orders, breaking them down, how to trade them, what to expect. All right, we're in that zone really quick. We're in that zone. I'll get to the other comments in a minute. All right, instantly you're seeing big orders coming in. Now I want to see absorption. So there is absorption here happening. And I'm expecting some kind of a reaction here. So it's not the greatest yet. We're still only at 220. You know what? I could potentially dip my toe in here. We've just stopped. Price has stopped. I'm dipping my toe in. I want to see if we can get below that 220 and a bit. Okay, sellers are coming in a bit now. There we go. I dipped my toe in right at the right time. Bang on at the right time. But I'm also aware that buyers can buy this up very quickly. So I just want to see how effective these sellers are. If we start drifting up again, it might not be right. You see the sellers are getting us slightly absorbed, but it's not the end of the world yet. I want to see a bit more pressure come in from the sell side. I'm just going to target, back down to these kind of areas. See if we got anything. I've got my finger on flatten in case. Yeah, the sellers are getting absorbed yet. I think it's not quite ready yet, but it showed. I'm going to get out because I think it's going to come back again. The sellers just weren't really that effective at pushing it down yet, but the good news is it stopped. So I'm going to wait for potentially a bit more of a pullback, and then I'll jump in again because the buyers are still very happy to keep buying up into all that sell pressure. Now, if the sellers actually, made a bit of movement down, like we had a bit of movement, but nothing, you just saw, considering the amount of volume, 510 contracts, and it just couldn't really get, like you expect a bit more, but sellers do keep coming in. Might not be bad. Let me just load up my cash account on this one. I'm just looking for a scalp, but so that's what I would call like a failed trade, right? Like it just didn't give me what I wanted. I expected a bit more speed. It's not looking terrible now. I mean, you got a lot of this sell pressure here kind of held up. not looking to, it's just this gap is a rubbish gap. It's barely a drop in volume. It's not the best. I think it will break this gap. This is the thing. I can't imagine it actually holding. But we'll see. We shall see. Let me just make this a bit bigger. Again, we're just kind of going sideways a bit. There is potential, but it's just not ready yet. You see the sellers keep failing. They wanna push it down, but they're not ready yet. And we haven't really got a massive amount of trap buyers. Considering, you know, like if we started at, okay, a bit more sell pressure comes in, but always getting absorbed at the bottom here. And this is where the buyers are happy. I mean, there was potential there, but it just wasn't, it didn't look clean enough, you know? I wouldn't expect like a massive extension down, to be honest. I'll look at the questions now. Why don't you do gold trades? So let's play. The reason I don't trade gold is, yeah, see, it just, they got absorbed. It wasn't really ready yet. And then all the buyers came in. I didn't think this area would hold too well. It's not a great gap. I'm glad I didn't jump in again there. But in terms of the next area, this is getting tough now because we don't really have any decent areas left. I'll talk about the gold. So the reason I don't trade gold is because you see, when you're trading order flow, you want to basically trade whatever instrument works best with order flow, right? So the Nasdaq, the S&P, the Dow Jones, those three, majority of their volume comes from the CME, right? There's like, it's one exchange, it's the CME, and like the futures market is pretty much the majority of it. Does that make sense, right? Like, of course, you know, individual stock buying and stuff can affect it, but like what the orders you're seeing have the most impact on the overall price of that asset, right? So when I'm reading the order flow, I have a better chance at whatever I'm seeing is going to be more accurate to the NQ, the ES, the Dow. Now, gold is a much bigger market, right? And there's many things that affect the price of gold that you won't see in the order flow, okay? So what you're seeing in the gold futures is a smaller chunk of the market, of the overall gold market. So, you know, you might see 100 contracts bought on the gold futures on gold, and it doesn't really do much, for example, because it's not, you know, you're only seeing a small part of it. So that's why most order flow traders as a whole, they trade, like the ES is the big one. The ES is the obvious one. That's probably the best one to do. But they kind of stick to the indices essentially. But you can absolutely use it. Like you can use order flow to help you trade gold, but then you're going to also need to keep in mind that there's other, you know, you probably want to do a bit more longer term with gold then. Scalping it is going to be a bit more difficult. You probably, you know, and use order flow as a bit more of a confluence to the overall kind of bias or sentiment you have, and your overall, you know, market structure, etc. You want to add a bit more other stuff into it as well. So, but you can absolutely use it. Like it's still useful. It's just not as useful as it is on NQ. Thank you for answering my questions. Could you please let me know which volume profile indicator you're using? Why not TPO? So TPO or volume profile, pretty much identical. And I actually explained this in the video I'm about to release. And the only reason I don't use TPO is just because there's no There's no like TPO is just on a session. The indicator itself, you can't do, like, you can't draw it where you want it. Does that make sense? So I'm using the fixed range volume profile, and that allows me, like, for example, if I want to see the volume profile just from this leg up, right, I can actually draw it just from this leg up. Yeah, I can't do that with the TPO. But essentially, if you put the TPO and the volume profile next to each other, they're pretty much identical, because they're both, like, the time price opportunity or market profile, TPO, tracks only time, right? How much time has been spent in each area. Whereas the volume profile tracks volume, right? And I do volume because although it does track volume, time is still the biggest metric, right? Like, for example, if I do a volume profile from here to, where we are right now, this area here is probably going to be a high volume node just because we spent a lot of time here, right? So yeah, that's the point of control, not because necessarily, biggest orders were placed here. It's just because we spent the most amount of time in that area, hence why the most amount of volume was accumulated. So that's why that's the point of control, right? So it's essentially the same as the TPO, but it just has a bit more flexibility because you've got the fixed range volume profile tool where you can draw it on any leg you want. You don't have to be stuck to just a session. Does that make sense? But yeah, basically the same tool. Good afternoon, Charis. How are you? We broke previous day low and rocketed. I am not bullish unless we break previous day high. Good stuff. I am buying at 25,754, 25,754. Oh, okay, I'm assuming you wrote that probably a little while ago and I missed it. But nice, yeah. That's a great buy, man. That's an excellent buy. Why not short now? 124 contracts failed above the bullish candle. Oh, sorry. Let me see. Here. Well, yeah. Okay. So the reason I didn't want to short just is because we broke this area. So I am very much like, if we're above a gap, I would more likely buy. If we're below the gap, I'll more likely want to sell. Okay. And again, I explained this in the video I'm releasing today. I'll show you exactly how I do it. And that's because these gaps have essentially, like, take this gap here, right? It's not the best. It's a pretty shitty gap, to be honest, but there's actually a really nice one here. So let me draw that one out, right? So as we're below the gap, I more likely want to short it, right? But if we break above it, I want to see a retest from the other side and a continuation, right? So I more likely want to buy it then. Okay. Obviously, if the order flow and the footprint chart confirms or gives me some kind of reason as well, I don't just blindlessly enter, but I need to have some kind of reason, right? And there we go, right? You can see it happen here. So when we're below it, I'm more likely to short it, right? Yes, it kind of failed. It didn't go right down, but you could have got scalps in nonetheless, right? And then when it eventually broke it, it came back, retested and continued, or it came back again here, retested and continued. And then again, eventually I will be more likely looking to buy in this area. All right, it failed, it broke through, and it came back on the other side and went down a bit. And then it just kind of traded through. And that gap is pretty much, once it starts like trading through and stops respecting them, and you just see it, like it doesn't exist, that's when pretty much you can kind of get rid of it. It's no longer being respected. All right. But again, I explained this in the video I'm releasing later today. So all that stuff will be much better explained for you. All right. And it still kind of respected it, and it broke through, came back, and then. So here we're testing the other side of it, right? Oh, let me zoom in. We're coming back to test the other side. So I'm more likely looking for a potential buy now, right? So I want to see what happens when we get into it. Do I see? I kind of missed what happened here. But maybe we dip back in and we can see what's happening, right? You're absolutely right about gold. I was trading it a lot, but the only way to successfully trade it is swing based on option prices, GEX, etc. Scalping is hell. I blew accounts. Yeah, scalping gold is tough, really tough. Definitely swing kind of trading is definitely the right way with gold. So you think gold is more volatile? I would say the NQ and gold's about the same volatility as a whole, like day to day, but just gold doesn't respect the order flow as much just because the order flow doesn't give the full picture, right? Because there's so many other reasons gold moves. So, okay, we're seeing, sellers come in real quick. So we're testing the other side. We're seeing sellers come in. Let's see how effective. They're not really that effective. So I can dip my toe in with a buy. I did click buy. It's just being really slow. There we go. And, we'll see if there's an extension. Now, if we get below those sellers, I can pretty much get out, right? I can say, okay, it's not ready yet. So I want to see, buyers come in aggressively. I want to stay above these sellers. If if these sellers start becoming too aggressive and start pushing the market down, then I'm not too happy. I'm probably going to want to get out. But I want to see now, trade above it, and then lots of aggressive buyers come in. Then you can add more size to it and ride it up, because then the move is nicely confirmed, right? Okay, so now we're starting to trade slightly below it, but we're still okay. There's a bit of aggressive buying coming in. You can see how the buyers are keeping those sellers trapped. There's a bit of aggressive buying. Want to really get above all those sellers and squeeze them out the market, essentially, right? Buy limit. Oh, the buy limit's not activated. I thought you already jumped in, Sharis. How do you see that is a gap? Omar, so again, I explain it in the video that I'm releasing today. I'll explain it. So real quick, can you see how these buyers are just getting absorbed? They came in quite aggressively, but they're starting to fail, right? That's a sign that maybe this is not going to work out just yet, right? Maybe it wants to have a bit more of a pullback. But I'm really not going to completely get out until we kind of really break those lows, because they could still come in a bit more aggressively. But we want to see, the aggression match movement, right? If it's not matching, then they're still being, the sellers are still quite adamant at this moment in time. But it is definitely a bit more in the favor of the buyers, if you had to, but I wouldn't want to pile on too much size right now until you see something clear, until these sellers start giving up and get squeezed out, because they're very much still in the market, these sellers, right? They haven't been squeezed out yet. Because you can kind of imagine, if you sold here, where would your stop be? It would probably be above that high, right? So you really want to kind of get that extension going. And then those sellers will be like, okay, now I'm out. It's still very much in play at the moment. Yes, they're in drawdown, but they're, it's not terrible. And you're probably going to see a spike in buy volume as we break these highs. You'll probably see a spike in buy volume. If we do break the highs, hopefully we do. But in a very choppy market like today, because the market's quite thin, I would already go to like break even. If you're already a bit above, and it's probably going to get me out at break even now, annoyingly. But look at that, sellers are still wanting to come in. They're not happy yet to accept loss, but this is a very good sign. You see how quickly we pushed up against them. That's a very great sign. You see that speed that happened? That's what you're looking for. You're looking for the speed of it as well, right? Not just, if it takes like a minute or two to get above them, that speed is what, and you see how the buy contracts, like I said, as soon as we broke the high, those buy contracts are getting big. That sees sellers getting squeezed out and stopped out, essentially, right? They're out the market now. Now it should move a little bit more nicely, as long as sellers, again, don't want to come back in, but they're still trying to short at the top here. But realistically speaking, we get below that 350. So if we get below, here, start getting below, as a scalper, I'd want to start looking at getting out. right? So you can see sellers still coming in. Are they being that effective? Not really. They're coming in with a lot of size though, which is not great. And you see they're coming in very heavy now. Very, very heavy. So clearly here, sellers want to sell for some reason, right? I'm going to hold this trade. I'm going to leave it at break even because it's a risk-free trade. Who cares? But you see where this was, where that original move, that was a really, really good sign. And I hope you caught that because it happened so quick. But this was like 300 sellers. And then within like a split second, we shot up like very quickly. That is like a very, very nice sign that this is going to be some kind of level of support here, because those buyers that did that, they're going to try and protect their position a bit, you know. And sellers, yes, they're going to still try keep coming in, but I think buyers will probably move them. Do you know what I mean? On this one, in terms of targeting for a take profit, honestly, I have no clue at the moment. I haven't even looked at where we are in terms of, oh my god, we're like, there's nothing to the left of me. Let me have a look. I'm going to move to the 15-minute. Okay. I just want to check that I'm not in any obvious zone, because I haven't actually drawn this out on the volume profile, which is a bit silly. Okay, so we're right by a point of control here, so that's going to obviously cause a bit of so I'm gonna target a point of control as TP. You don't really want to be, you know, because there's going to be some kind of pushback around the point of control. And technically, you know, we're kind of already in it. The line itself is just the middle of like the massive amount of volume. So technically we're already kind of at the point of control. So it could happen anywhere here. Could be kind of, you know, a danger zone already. So realistically, if we start struggling to break above these these highs here, and sellers keep coming in, I'll probably pull the position. Just knowing that we're near that point of control, there's going to be chop. It might start consolidating a bit. I'm going to jump back to the 1 minute. But while we're, you know, this is looking all right. Look at these buyers coming in. Might be okay. And you just kind of want to stay above the mass amount of volume on your side, you know. So we want to stay above. Oh, look at that, 600. Now this could be dangerous for the buyers, because they could very easily get squeezed out here. So this is, I'm going to really keep my eye here and flam, because now when there's so much buy volume, that means there is definitely an iceberg on the sell side in the book right now. And if the buyers fail to really get much higher, there could be a bit of a pushback here. So you might as well get out and then, you know, reevaluate. But they're fighting it. They're not really getting pushed back too much. So it's still okay. It's still okay. I'll probably start trailing a bit here. What is this? 84150 is kind of going to be my stop. I'm going to trail it to about there, because I really don't want to get below those heavy buyers. If they fail to protect that area, then there could be a bit more of a pullback. Almost. They're fighting it. They're really, really fighting it. But there's definitely an iceberg in the market. Oh, one ticked. Nah, they broke. But nonetheless, do you see what I mean? It's a very choppy market today. Normally on clearer markets, like if you just look at the candle, it's kind of very choppy. So it's a bit of a shit movement. But sometimes you get these really nice movements, you know, where it's just, there's kind of no real pullback, no resistance from the other side, and it just kind of glides. That's when you really want, you know, those are the beautiful trades. But All right, let's let's see what these comments are saying. How you see that is a gap. So yes, Omar, like I said, later on, in 3 hours time, a video is being released on my channel. I explain all that in very good, like in depth. Okay. Thanks again. Is drawing the fixed range volume profile works the same way when you are in a bearish trend? Yes, absolutely. Absolutely. So if you're drawing it in a bearish market, so for example, let me just find where we kind of went down. Like this is still very much ranging. All right, we had a nice little push down there for a bit, and it created bearish structure, right? So you would do like from the highest point, I would say probably there to like the lowest, right? And then you would draw out any kind of gaps in the volume, like that one, that one, that one, and yeah. But again, I explain all of it in the video. We have stopped few points below previous day high and week high, meant to be equal high. Yeah. Where is the previous day? So this is obviously Friday. Yeah, we're not far away from it, are we? Yeah, not very close to it. It's that point of control. There's going to be a lot of, profit taking for any bulls here. There's going to be naturally people trying to short the market. So it's going to get a bit choppy around those areas. So I'd be very cautious now buying the market. Unless there's a very good pullback, I'll be very cautious buying near the top of what is essentially kind of a range. I mean, there's been moments where it trended a little bit, but it never really broke out and was still very much kind of in this nasty, choppy area. So I'll be very cautious buying into that near the top of it. How you mark levels. Vishnu, later on today, in 3 hours time, there's a video coming out and I explained that in good detail. So check back on my channel, 6 p.m. UK time, 3 hours time, there will be a video. Okay. There is a wall at 850. Did you see it in the book, Charis? Where is 850? I move so quick. This is such a terrible depth for market. If we get broken, we will accelerate, I believe. I mean, that would be nice if that happens, actually. I think, yeah, I would want some like good confirmation that we're going to break these areas here. But until that happens, I'm kind of, I'll be a bit more cautious. Was that move an iceberg? So yes, there's definitely an iceberg in the market. And the reason you can spot it is just because the volume versus the movement does not add up, right? Like when there's 500 contracts being bought extra here, right? Additional, there's the delta, and it doesn't really move up. There's only one reason it doesn't move up, and that's because there were sell limits at 845 roughly, a big iceberg that just absorbed all those buyers, right? So that's when, if you're in a buy, for example, you want to be cautious. If you're seeing big volume on your side and it's failing to kind of get higher, that's when you're like, yeah, it's not looking good. Like maybe there'll be a pullback here because there is an iceberg. But then again, there's an iceberg down here as well, potentially, right? There are icebergs like everywhere in the book, but it's the ones that really stick out, really obvious. And they do get broken, don't get me wrong, like they get broken all the time, right? But the ones that are really extreme, like this 500, right? Like we don't know how big that size or that iceberg is, right? It could be 2,000 contracts. Who knows? Like there's no way of knowing until it breaks and then it's all been filled. But you have no idea really. So if they can absorb 500, there's a good chance they'll probably absorb another few hundred minimum. So it's going to take a lot more volume than an extra 500 contracts to get really above this whole kind of area, right? So then you kind of get wedged and it consolidates as, you know, there's a bit of ping pong being played essentially. And yeah, you just kind of sit and wait basically. There's nothing you can do because you don't want to really jump in, buy or sell right now, because either side is just it's not working. Like, look how many sellers tried to come in, they can push it down. Buyers tried to come in, they can push it up. There's two big players, you know, fighting it out, and we don't know which one wants it more, right? You can't really tell. You just kind of have to wait for the result, and then you know, okay, the buyers won, well, okay, the sellers won, and then you can figure out your next move from that. But while you're kind of stuck in that area, you might as well flip a coin. The only time you can kind of figure it out is if you have a tight range like we do now, and you look at the cumulative overall, right? So we started it, like in this range, we started at 3,830, the delta, the cumulative delta to the buyers. And now we're at 2,800. So an extra 1,000 sell contracts came in, right? In this small little area, but we didn't push down, meaning overall buyers are still more efficient, right? Buyers are still better at, you know, pushing the market up than sellers are pushing it down. So because of that, I would be more inclined to favor the buyers, and the buyers are more likely to break through and beat the sellers than the sellers are to break through and beat the buyers at this moment in time. But it will rotate and rotate and rotate until one side essentially gives up or is exhausted, whatever, right? So in that case, like, you wouldn't want to buy right now because you're near the top of the range, because there's a good chance it will just go back down again and range. So if you're seeing, you know, if we go back to the bottom of the range, if you're happy to do kind of like a range bound play, then absolutely you can jump in for a buy near the bottom when we get to the bottom of the range, have a tight stop loss. There's a good, you know, there's a decent probability that it will probably rotate back up. But then also expect there's a good chance that if you get to the top of the range and you're in that trade, it could just come back to your entry. So you're better off just targeting, you know, like if you got in here, better off targeting 20 points or whatever to the top of the range rather than hoping that extension is going to happen right now, because this could range for 20 minutes, 30 minutes. If you're happy to sit through it, fair play. But yeah, as a scalper, it's generally best to, you know, target what makes sense. Great trade, Sam. Thank you, Thomas. Hey, Benjamin, good evening to you. If you're not trading right now, could you please open gold chart and explain how you would go about it? Okay. I mean, like I mentioned, gold is something I don't like trading, just because the order flow doesn't reflect the true market, the overall size of the market, right? It does to a certain degree, but it's a lot harder to read on the footprint. So with gold, I would be a lot more, you know, longer term moves. I mean, it's geez, look at this. It's just, I mean, right now with gold, you might as well just buy at any point right now. I mean, it's just been insane. Look at this. Absolute insanity. It is literally just buy the dip. That is what gold is right now. Buy the dip at any opportunity, longer term. Don't scalp it. Buy the dip. It's just mental right now. Like it looks like a meme coin. It doesn't even look. Wow. But what I would do with gold, like if I'm waiting for the next dip, I'll look, all right, where was the last push up? So we had a dip here and then we pushed up. I'll draw a volume profile from, you know, where we pushed up, and then I'll wait for the next retracement, right? And I would draw out any kind of obvious little dips in volume where we could kind of reject again and I'll just set alerts and wait for it to kind of come back. There's a little pullback and then buy the dip, because gold is so bullish right now. That's literally the strategy for gold that I would implement. But in terms of scalping it, I would say stay away scalping gold. If you want to be a scalper, stick to the NQ, the ES. That I'm telling you, a million times easier to do as well. There's no need to trade something more difficult. Keep it simple. And if it's because you don't have futures and you want to trade CFDs, absolutely fine. You can just trade the NAS 100, right? If you're trading NQ, use the NQ chart, right, and the volume, and then just place your order on like the NAS 100 on a CFD, right? It's the same chart. Now this is tick data now, right? This is an actual real volume data. This is tick data, so don't look at the tick data. You only want to look at candlesticks then. But yeah, it's the same chart, right? So you can just do that. Always make sure though, if you're using the volume footprint, that it's the actual real volume and it comes from the CME. It's not tick data, right? Okay, so we actually broke out. Sellers managed to get it. But like I said, we're near the top. It is a bit dangerous. You want to be cautious buying when you're near the point of control of a heavy area. This might just be a little dip, and I can imagine, we could rotate back up a little bit, come in for another test, because I don't think the buyers are ready to give up yet. When you trade the opening of the market, do you usually mark the previous high or low of the last week, high or low? Then if the price don't reach that, it's signal that the market will be bearish, or vice versa. That is a strategy. That's not what I do. I only use the volume profile and I mark out gaps. That's literally what I do, right? But yeah, that is an absolute, that a lot of people do that. That's a completely fair strategy to use. Highs, lows of previous days, weeks, all those areas do have an impact. And you'll absolutely see reaction in them. So, there's indicators out there where they just automatically mark them out for you. It's well worth having it on the chart. Because essentially you just want to pair up the footprint with any area on the chart you expect something to happen. Do you know what I mean? A high, a low, obviously an important high, an important low, like you mentioned, previous day highs and lows and weeks and even a month, obvious areas of support and resistance where the price, really kind of reverse quickly. Any kind of area where you expect something to happen is worth, pairing up with the footprint and then making your decision. I personally like the little gaps in volume, but you don't have to use them. You can, like you said, use the highs and lows. Yeah, but it got swept, although we didn't pass higher. I got in a sell just in case because of 1 micro. Very nice. UE5, Sam, hypothetically speaking, if an institution were to place an order for 500 contracts, what would happen on execution? Would the position be filled immediately? So that's a great question. If an institution right now was to place 500 contracts, right, as a market order, so literally hit the buy button, it would get executed immediately, but it would probably cause the market to gap a little bit, like jump up very quickly, right? Because it's going to take, like if you look at the book, it's going to match it up. So there's 6 orders available in the next level, 15, 10. Yes, some of these are going to be, icebergs. But to fill the whole 500, it's probably going to have to gap up quite a few levels. Do you know what I mean? To fill the whole 500. So if they placed an order, let's say here, in order to fill the whole 500, they probably get executed and get filled, around here. So they're going to get that slippage, right? And their average price will probably be somewhere in the middle. So that's why a lot of institutions, when they want to get in with size, they don't do it as market orders because they're getting a bad price. They wanted to be executed at, 807, but their price is now 819 because they've basically gapped the market, which isn't, They don't want that. So they rather enter and accumulate orders passively, because if they just have an iceberg sitting here at 808, and every time, sellers sell into it, they're not going to push the price up because they're passive, right? They're just in the book, but the sellers aren't going to push it down because they're absorbing it until their order is filled. Now they've got, the full 500 contracts at 807. And then if they want to get the price a bit higher in their favor, they enter a bit aggressively. They start trying to push that market up. And that's essentially all they do, right? But of course, sometimes institutions do enter aggressively and gap the market. That's why I like to draw out these gaps, because these gaps are usually created, especially in a trend like this, when an institution has placed aggressively a few orders and caused price to move very quickly through an area, right? Gapping it. And that's why if it comes back in that area, there's a good chance there's going to be some kind of reaction, right? So like, take, this push up we had here, right? If I just do a volume profile from here to here and see where is any like real obvious kind of drop in volume, we don't really get anything superb, but the best one is there, right? Something caused right there, something caused, and it happened here, probably on this candle here, right? Something happened here, which gapped the market, and the market didn't spend a lot of time in that area. So if we go to the footprint, we might see and figure out what exactly happened here. So there we go. And that was, you can kind of see, the heavy volume that came in. Although it's a low volume node, it's actually where big institutional activity took place, and they caused the market to move very quickly. That was that kind of, our earlier where it just went a bit mental. That was probably more likely an algorithm of some kind. But, and then, and it worked as then support, right? They started defending it, and you could see the absorption happen. And so that's why these low volume nodes work really nicely. But they only work, if they're trapped, right? Like here's heavy volume, and then a dip in volume, and then heavy volume, right? You're looking for that dip in volume kind of sandwiched between heavier volume, right? Because that indicates that there was, transactions happening here, and then it shot up very quickly through here, and then more volume came in, right? And if you compare that up with like the candles and the structure, then, it works very nicely. That wasn't the best example because it is still quite a choppy market, but in nicer trends, you get really nice examples of it. Maybe we haven't really had, this is pre-market, so there really wasn't going to be that much institutional activity. But if I just do, this little area here, we don't really get a major gap, right? Like a really obvious, just because there wasn't that much institutional activity. So the buyers are happy. Like I said, I wouldn't be surprised if they pushed it up again. They're not quite ready to leave the market yet, the buyers. But we actually, funnily enough, tested that gap I just drew out a minute ago, and they defended it again, the buyers. So they're still very much in the market, those buyers. They're very much, still interested in getting this market up. What does zero sell contracts mean in one of the candle there? What it mean if zero shows up at high or lower bullish or bearish candles? So in this scenario, since this is the delta, if you see a zero, it just means there were equal amounts of buyers and sellers in that area, right? So this is just the difference. So look at that 6, for example. If I switch on buy and sell, there were 47 sell contracts, 53 buy contracts. The difference between that is obviously 6. So that's all you're seeing. All you're seeing is just the difference. Doesn't mean there was low volume. It just means there were very kind of, buyers and sellers were pretty much, were flat. But you're looking for imbalances. So that's why I like the delta. You're looking for, a clear, one side is a lot more aggressive than the other side. That's what you're looking for. So I just ignore, my eyes ignore all the small numbers, basically. I'm only looking for bigger chunks, big numbers I'm looking for. What if the market's choppy, Sam, and you can't find that solid low volume node? Is it okay to mark those big contracts that caused a bear and bull and wait for the retest to that? Yes, absolutely. Like, for example, that's an excellent question. So if you see like a very clear example of, you know, lots of heavy buy volume came in and the market just kind of pushed off, like here, right? It's all about how effective it is. There was a nice big chunk of buyers came in here, and they, you know, the market kind of pushed off, right? Not too aggressively, but nonetheless, it kind of pushed off. So, you know, if we dip back into that area, there's a good chance buyers might defend, right? But it's more about the speed, in my opinion, as well. Okay, that's why earlier on, I might make a short out of it. I can't remember where it was. I really can't remember where it was. I feel like it was, I really can't remember exactly where in the chart it was, but there was a really nice, no, I don't know where it was, but somewhere near the beginning of this session, there was like a clear-cut example of where I was like, oh, this looks really good. This looks really good. Because we basically saw a bunch of sellers come in. Let's just say it was this candle. I don't know if it was. I can't remember which candle it was now. But excuse me. Let's say it was this candle. We saw a bunch of sellers come in. It was like 300 contracts on the sell side, right? And then literally split second, it didn't even, you know, it was so quick. 300 came in and it instantly just jumped up, like gapped up really quick, and those contracts were stuck at the bottom and buyers came in. That shows, you know, there was an institution aggressively entering hard, right? Like they mean business as well. You know, they're going in aggressively. They're not just going passively. They mean business, these guys. So that was like a really nice thing to see when it happened so quickly as well. That's when you're like, okay, yeah, this is good. This is really good. But again, you know, like heavy buy volume came in. It's not, this market isn't that nice. I'll be honest. It really isn't that nice, because even every time heavy volume comes in, there is still a lot of kind of resistance. It doesn't really take off with a lot of speed. But say that took off like with a lot of speed, right? And we got a bit higher and then it kind of came back into it and sellers failed to kind of push it down. Then yeah, you know, you can use that as like an area to buy into. Hey Sammy, how's it going? I'm good. Jose, how are you? I think there is a problem with your network. Oh, am I still live? Can you guys still hear and see me? It says I'm still live. Hopefully. Oh, I'm live. Okay, cool. Yay, sell working. Good. Close sell at plus 25 points buying the breakout now. Very nice, Charis. Imbalances where the low volume node is. Yeah, essentially. As long as it makes sense. Do you know what I mean? The low volume node. If it doesn't make any sense in the structure, then you can ignore it, right? So it's because what you're expecting, the low volume node should be created because the market moved very quickly through it, right? So like, again, if I just draw out here, where is like the most obvious low volume node that's kind of trapped? There's one up, one there, and then there's actually one just being created here, right? So let's see in the candles what actually happened there. And that kind of makes sense, right? Because you can just see how quickly we kind of moved through. Now, if I go to the footprint and look at the volume there, I'm expecting to see heavy volume creating that movement, and boom, we get exactly that. Those buyers, look at that heavy volume in there, right? That created that move up. So that makes sense to me. Do you know what I mean? I would expect if we get here, those buyers are going to start defending. They're going to start, you know, they're not going to allow themselves to be stopped out. They're aggressive. They're obviously, you know, got a lot of size, a lot of money to play with. They're probably going to defend their position, right? Now, it doesn't have to happen exactly in that area. It can be a bit before, because sometimes they want to defend a bit earlier. They don't want it, you know, if they entered, well, they entered like in a whole area here, but, you know, they might start defending a bit higher up before their entry. They might get, you know, the sellers might be able to push it down a bit more, and they'll start defending heavier as they get really to their entry. You're just looking for that kind of defensive play then, you know? So remember, low volume nodes, generally speaking, is because there was a big buyer or big player in the market that pushed the market very quickly. That's the only reason it's a low volume node. It's not because the volume was actually low. The volume is quite very high here, right? It's just because it didn't spend any time really here. It gapped very quickly because they were aggressive. 25,900, 100 contracts all on the book map. Very nice, very nice. 25,900. So here, all right, we're getting back in that area, right? Now you're seeing this big chunk of sellers. There's a good chance that's a lot of these buyers actually getting out at break even, because you're seeing this spike in sells. So there's a good chance a few of these buyers have decided, my trade didn't work out, and they're getting out, right? So I would no longer believe that they're going to defend, right? Because you didn't really want to see heavy sell volume come in, because the only reason that heavy sell volume's there is because it kind of makes sense. You know, if they bought here, they've just got out at break even, essentially. Do you know what I mean? And their exit looks like a market order, a sell market. So I wouldn't say that area's in play anymore. And that's why we broke it quite easily, because they didn't defend. Do you know what I mean? They just didn't defend. Now, if they came in heavy, if these were buy orders, that's a different story. But we had sell orders come in, which kind of matched up even in size, you know, 300. It kind of matches up. Yes, it's the delta, so the size itself is not going to be fully accurate. You want to look at the buy and sell for that. But you can see, you know, 400, 400, 400, 500. Yeah. A lot of those, you know, the numbers kind of match up to what you expect. Those buyers were 400 and another 400. And then as we got to their entry, magically another 400 sells came in. That's them getting out, basically. Do you know what I mean? That's them hitting flatten. And then that 500 there, that's these guys getting out as well, right? Obviously, there's going to be additional sellers as well. It's not going to be to the T. It's not just one person in the market. There's obviously multiple. But the main like chunk of the volume kind of matches up, which leads me to believe they didn't defend. So that's why you don't want to always blindlessly enter on these gaps as well. You want to actually see that something that logically makes sense in the footprint to happen. So I hope that was nice and clear. That was actually a very nice and clear example there. That's why you're scalping on big contracts without using low volume node, and mark those wicks and make a box on them and wait on them. Yeah, so, okay, don't put too much emphasis on these boxes. They're actually out of play already. I just had that box just as a reference when I was in that long. I drew it out because I was in a buy position here earlier. And when I saw the 500 come in, I just drew a box there just to see, you know, visually to see if we're getting below it and above. That's all it was. It wasn't like support or resistance type box. So you can actually ignore that box. And that was long time out of play. I should have got rid of it ages ago. 40 points got taken out by trailing stop loss. Very nice. 5 last, yes, loud and clear. Boom, 500 contracts. There will always be a low volume and a high volume node. Pretty much, you're always going to see high and low volume nodes. Pretty much in every move, it's just you need to use the footprint to select which ones are going to be the good ones. Do you know what I mean? In real time. So we can mark that and wait for the buyers to defend. And if we see seller absorption, then we can enter a buy. So, all right, here's one way to look at it, right? You're almost right. So you see that, where was it? The hell was that? Oh, it was there. Yeah. Sorry, I don't know what I'm looking at. You see those buyers that came in, right? They created a little gap because they came in very aggressively, right? Now, because it happened only happened a few minutes ago when we were starting this pullback, right? They are guaranteed to still be in the market, right? It's very unlikely they exited 2 minutes after they got in. I mean, it can happen, but very unlikely, right? It's doubtful that would be a take profit for them, okay? So they were just in there and just got into their order. Now, although because we had those big sellers come in exactly at their level, right? It makes more sense that was these buyers getting out at break even because their trade didn't go. They're just protecting their position, right? Protecting their capital. Okay, and they weren't willing, or they lost faith for whatever reason. They weren't willing to jump back in more aggressively to try get the market up. Maybe they thought, maybe I bought the top and this is not working out. So they said, all right, fine, we'll get out break even. It's no big deal, right? That kind of makes more sense. Do you see what I mean? Because these were obviously scalpers, right? But say it was like an old, like a low volume node from way back, right? Where people entered, near the beginning of the move and they're probably still in the move. It's not even going to be so much the original buyers trying to defend, but it's going to be other people also noticing that area and going to be willing to buy just like you. Do you see what I mean? So then stuff like absorption will come into play more and people will hide their orders in the book to try and get into the market, right? But when it's like very immediate, like only happened a few minutes ago, it's less likely they're going to put loads of passive orders here to try and buy. They'll just buy aggressively again to try and protect their position, but they didn't. They just exited, right? So kind of look at it as, what's the game plan of that person who jumped in? Put yourself in their shoes. If you just entered there, we drifted up a little bit. We slowly start looking like we're going back. We're quite high up already. We're near the point of control. Yeah, maybe I got in a bit late. Maybe this is, I'm going to get out break even here. Like, do you know what I mean? You have to read it like a story. If you can figure out the story, then it all starts making sense. My brain doesn't work that fast. To be fair, I mean, yeah, New York Open can be very, very quick. But if you trade when the market calms down a bit, a few hours after, it's actually very calm, the market, and it's a lot easier to, you can have more kind of time to make your decisions. Or the ES is perfect then. The ES is nice and slow and calm. Charis, how about a big chunk of orders at the 3.39K delta, 3.39K? I don't know when you wrote that, Charis. Let me see. I'm assuming it will round here somewhere. Were you talking about this area? Because I'm assuming the delta changed a little bit since you wrote that, so they should protect. It's at 45. It's there on the left. Oh, these guys here. A little more. These guys. Oh, this chunk of orders. Right. I'm with you. 3.39. I don't see 3. Oh, there it is. Yeah, you're right. 3.39. Sorry, I was completely blind. Yeah. I mean, potentially, again, but they'll be very similar to these guys, you know. They got in, they weren't that aggressive in their move. Like I think a lot of it, like they didn't really, I don't know. That's why I used the volume profile. Let's see if there's, yeah, there was definitely some aggression. You can see the gaps and the dips in volume as the market moved very quickly. But I think they would be very much similar to these guys here, where if the market came in, are they going to start being aggressive and defending? They are by the looks of it. There is some buy volume, but there's also a lot of sell volume getting absorbed. So give or take, I think that's going to be a bit more of a collective rather than fully one individual, just based on, you can even break it down on like the 15-second chart. Let me just put a line there. Whoops. There it is. And then 15 seconds. Was there any like clear? Yeah, they kind of, it was a bunch of individuals. If you look, it was more of a collective play. And I think, just looking at the structure, I think that was more likely a breakout. Where is it? As we broke out the highs here, I think what we're seeing on that one was more likely actually some take profits. So remember, if there's a take profit level, so there will be sell limits, right? If you bought down here or wherever as a scalper and you put your take profit at a high, your take profit is going to be a sell limit, meaning it will, it'll be matched up to aggressive buyers and appear as a bunch of buy orders in the book. But I think that was a lot of profit taken actually from buyers rather than like one institution being very aggressive. So I think when we get back there, are there going to be people buying? I think so. And we have had that, but it's a little less kind of, for me, it's, yeah, just because of this high, I think it's more likely going to be some kind of profit taken there. And obviously breakout traders as well. But I think it's more like a larger collective of people doing it rather than like one institution kind of just jumping in and being very aggressive, right? And it's a lot like it's much more cleaner when it's like one big player because they're, you can track them a lot easier. When it's more of a collective, it's harder to track what everyone is doing because some people are going to get out early, other people are going to try and hold it. You know what I mean? Everyone's orders kind of gets distributed in different areas. But when it's like one institution or one big player, you can track them almost immediately in the market. Are you doing any more trades or are you sitting the rest out? I will probably still do more trades. Yeah. We're just kind of, we're in a shit area. This is the problem. There's nothing really above, apart from, we've got this point of control up here. So I don't really want to buy into the point of control. And I'm expecting it just to range a bit because there's going to be a lot of sell people. There's a lot of people going to be getting out the market. A lot of buyers are going to be taking profit near the point of control. There's going to be a lot of new sellers entering the market. There's going to be a lot of people trying to buy the dip. It's going to become a very choppy area. So we're just kind of in a shit area, unfortunately. We're not in a clean area. And that's why we haven't really, for the last, 30 minutes, we haven't really done much, if was profit taking from buyers, wouldn't it translate into red candles? It will only translate into red candles if they exit as a market order. So I'll show you what, like I'll do this with 1 micro just as an example, right? So if I hit buy right now, that's going to show up as a buy contract in the footprint because it's a market order because I'm aggressively entering buy. So that will show up as a buy, right? Now, if I hit flatten or cancel or like manually exit, that will now show up as a sell, okay? Because it was a market order. But say I hit now buy and I set a take profit, right? That take profit is now a sell limit. So when that gets triggered, okay, it's going to get matched up with an aggressive seller and appear on the footprint as a sell. So take profit, so buy take profits appear as sells. By manually exiting because they're panicking or whatever, like, oh, I got to get out, that will appear as a sell. Sorry, I'm confusing myself here. Buy take profits will appear as buys because they'll get matched up with a buy, right? So yeah, you might want to write it out because it just becomes a lot easier to have it like as a little chart somewhere on a piece of paper, and then it becomes easier to do. I got confused myself there, but essentially, yeah, if I like sell right now, that will appear as a sell in the footprint. My take profit is now a buy limit order, so when that gets executed, because it's a buy limit order, it has to be matched up with an aggressive seller, so it will appear as a sell again, right? But if I exit as a market order, like click the exit, that will appear as a buy. I hope that makes sense. Now, with stop losses, they're kind of similar, right? So a stop loss is a market order. So if I enter a buy and I put my stop now, that stop loss will be converted because it's not in the book in the depth of market because they're not limit orders, they're stop orders. That will get converted as a buy order. So sellers getting stopped out will look as buyers, will look like buyers, and buyers getting stopped out will look like sellers. Okay, so this would appear if I get stopped out now. This will appear as well. It won't appear here because it's obviously demo right now, but you know what I mean. This will appear as a buy basically. So you have to use like logic to kind of figure out what is actually going on. Does that make sense? So like on a breakout, you can imagine, all right, there's going to be a lot of, take profits from the buyers here. A lot of those buyers are going to be, take profits. Yeah, try read it as a story and then, be aware where you are in the market, and then it kind of makes sense. But I'm still struggling about this low volume node markings because every candles can be a FVP setup, even in a ranging market. I think FVP. What do you mean by FVP, Benjamin? Can still be applied. What is FVP? I actually don't know what that is. Fair value price. It just got said. French volume profile. I don't know why I find that so funny. French volume profile. That's brilliant. Fixed range volume. Oh, okay, fixed range volume. Look, I mean, you want to do it on like larger legs. You don't just want to do it on like each individual candle, every tiny little move up. In that case, you want to be looking at like the 15-second chart. Do you know what I mean? You want to do it on larger kind of moves, like moves that actually created something. think of it like this. If I entered, imagine you entered, you entered short here. Would you be happy? Well, yeah, this is quite a decent move down, right? As a scalper, you would be quite happy. So you would draw the move out. Let me just get rid of extend right here. And you would look at where are the clear kind of gaps. Now, there's going to be loads of them, right? Like I said, there will be quite a few. But you're looking for the most obvious ones. Which ones really had a clear dip in volume, right? And there's one right here. Look how much heavy volume there was, because we're moving down. In order for that gap to occur, think about it. There's got to be a heavy seller here that entered and pushed that market down very quickly. And that's why there's a big drop off in volume, right? So this one is like a clear one where I would mark it out. This one looks the best. Do you know what I mean? There's also one at the top here, which is not bad as well, right? So you really only want to look for like the clear kind of ones that are sandwiched, right? So those two would be the ones I'd be most interested in. So as we came back into those areas, what am I looking for? Defense? I'm looking, now this is pre-market, obviously. So, it's not the best, but if you want to do it when there is real institutional activity. Pre-market, you're not really going to get that, right? Because the numbers are just tiny, but you can see where the order was placed, right? If you look at just where is the biggest order, the biggest sell order, well, you can see the 88, right? And it's perfectly in that area, right? So that would be kind of, all right, that makes sense. So I would look, when we get back there, I would look at potentially shorting the market if I see some kind of defensive play happen. Now, when we got there, we didn't really get that, right? You just saw a lot of buyers came in, no real heavy sellers came in. We didn't see big aggression come in. All right, then fair enough. Like, they're no longer interested, right? Now, these are like the really small areas based on essentially, because the more you do it on like a 1 minute chart where it's it's going to be more scalpers as well. If you're doing it on the bigger time frames, like a 15-minute chart, and look for the bigger moves, okay, you're going to have more longer term players, right, in the market. It's not going to be scalpers, so they're going to have more weight, these bigger areas, right, these bigger gaps, right, because these are more longer term plays, so they're going to have more likely there'll still be some kind of interest in the market in those areas. On the 1 minute chart, when you're looking at them, there's a good chance if someone's created it, they're already out the market and took their profit. So when it comes back to the entry, are they really going to care about defending it? Probably not. Especially pre-market as well. Pre-market is shit. I wouldn't recommend doing it 1 minute pre-market, but the way I do it is 15-minute chart. I look for what move are we currently in? We're currently in a bullish move. So any pullback, I'm looking for the gaps in the volume on any pullbacks, right? And you can see from where we started this bullish move to where we are now, there's a gap there. There's a bit of a gap there. And that's really kind of it, And okay, we opened up today with a weekend gap as well. That got filled very quickly. But we never really came back to properly retest it. So we haven't really had much of a good buy opportunity. And then, on the longer term, if I go to like the hour chart, I mean, we are just ranging, but we had this push down, which we haven't yet broken the highs off. So this is kind of in play still. I'm looking for a clear kind of gap, and there's only one that is really obvious that sparked the move, and it's there, right? We have tested it before, it rejected. We got close to it, rejected. So if we come back into that area, like, I'm very much interested in shorting. Do you know what I mean? But we still got quite a way to go. And sadly, right now, we are just in a very shitty area. We're at the point of control. Like I said, there's just not much here at this moment in time. Could you please request your video editors to make one video of your live sessions of all the trades you took? Well, that's yeah, I'll okay, yeah, we can do that. I'll ask them to do that. We can do that. Project X crashes and blows accounts from a micro example trade. I wouldn't be surprised if that happened. The French volume profile always retreats. I realize this low volume node is like fair value gap on ICT. Yeah, I don't fully understand what a fair value gap is. I'll be honest, I never really looked into it. I know it's got something to do with wicks, right? I think it's got something to do with I'm not going to pretend like I know what a fair value gap is because I've never studied ICT or anything like that. But I'm assuming from my understanding, for example, a fair value gap would be between this wick and like this wick, the one that started it, something like that, like the test. So that would be like a fair value gap, if from my understanding, right? And you would look at potentially buying it. Now, that kind of does make sense because you're looking at the candles, although they don't really show you volume, but they can show you, again, the volume profile shows you time more than anything, right? So you can see time based on the candles, like how quick the candles moved through an area. Like it didn't spend much time right here, like especially like this area here didn't really spend much time. So yeah, I can see how that is probably going to be an area where there was, you know, a buyer came in very aggressively, pushed that market up. Kind of makes sense, right? So if I did like a volume profile from here, let's see if it matches up. So there's like the clear gap right there. That's the one I'm really interested in right here. I wouldn't really draw here as my gap, but that is the one I would draw personally. And if we came back into it, that would be my, you know, because this is a longer term one. This is on the hour chart. So these are like going to be a lot more powerful. That would be my absolute buy area. And as you can see, we tapped into it again and freaking hell, we shot off quick, right? So that's, for me, that would be my gap. I wouldn't draw one here, but 100% that is a beautiful one. You can really just see how the volume drops off, right? You can just see how it's a high volume node, low volume node, high volume node. It matches up with the candle. We didn't spend much time there. The candle shot off really quick. If I switch to the footprint, hopefully the footprint data is still available this far back, because sometimes it's not. You're probably going to see a bunch of heavy buyers in this area, right? Let me just switch it to auto so you can see a bigger, yeah, I mean, just look at the volume. It all matches up. Do you know what I mean? Everything matches up, but this is a legit area. When we get back in there, you're definitely looking to buy. Do you know what I mean? Like that's insane amount of volume came in. So yeah, they gapped the market very quickly, very aggressively. And, you know, it actually came back not long after. You could have jumped in. And this is probably going to hold for a while as well. It's going to be one of those areas that will hold for quite a while. And as we came back the second time, look at them. The buyers coming back in, sellers failing to push it down. A lot of sell volume coming in, starting to get absorbed. Buyers coming in heavy, especially if we get above, you know, these chunk of sellers. I would expect as we get properly above them, there's going to be some kind of, you know, nice buy movement. And okay, this is pre-market already, but yeah, like in real time as well, if you're looking at not just the hourly, if you were to look at like the 5 minute or the 1 minute, you'll probably see that happen in real time a lot quicker. But as more of like a swing trade or intraday trader, you can look at like the hourly or whatever. Sam, you're really such a genuine character and teacher. Please keep up. I'm learning a lot about footprint. That's the only thing I don't use there. Charis, you're welcome. You're welcome. And thank you for the kind words. But you're a great trader, man. Every time you're like, oh, I got in here. I'm like, great trade. Do you know what I mean? Like, yeah, really good. So yeah, use the footprint. I can imagine, you're just going to get even better and better, but you're doing amazing already. Dow theory called them price voids. Okay, I've never heard of that term before, price voids. I'll Google it. I'll look into it. Interesting. Banger. Took long after we swept 40 to 90. Very nice. 40 to 90. Where are we? Okay, yeah. From the bottom there all the way. Oh, that's a beautiful trade. Well done, Sandy. That's a lovely trade. Yeah, that movement is just, sweet. Really, really nice. To be more precise, 809 buy orders in that low volume node is actually fair value gap because those aggressive institutional buyers didn't buy there, right? 809. 1 minute. Let me see. I'm assuming you wrote that when I was doing this area. Where was it? 809 here. Uh, 809, like talking about this area, to be more precise, 809 buy orders in that low volume node is actually fair value gap because those aggressive institutional buyers didn't buy there, right? I'm not entirely sure what you mean. Not entirely sure what you mean. See up. Are you talking about the actual where the gap was created, or are you talking about the retest of it? The candle had 809 orders there. Oh, here, right. Okay, I'm with you now. I'm with you. So, yeah, essentially, that's exactly it. You've bang on. You're right. So you can see how the heavy volume is there, and then the reason there's not much orders here is probably because it gapped very quickly. Not because buyers didn't want to buy, but because these buyers who did buy, they just cleared the book in a super quick move, right? And there wasn't enough time in this area for volume to really build up. So absolutely, this would be, zoomed in version of that gap. And that's why exactly when it touches it to the wick, it rejects here. So you're absolutely right. Yeah, well spotted there, actually. You're getting the hang of it now. Very well spotted. That was actually very well spotted. I didn't even notice that. So well done. Well done. I think here in the Philippines, I'm the 0.01 who is interested about this order flow and the only trader apply this on trading, no joke. But so far, I can really understand easily as market movements. Excellent. Really good stuff. Really good stuff. I got into a buy, was 30 points up, added one more micro. The entry went up, got wicked at entry, and then you got the thousands of buyers. Yeah, it happens. It happens. How can I be sure that those buyers exited after the market jumped up? They would have exited at some point, right? Like it's hard to know exactly when, longer term buyers get out the market because they're not getting out the market like as one take profit. They're going to get out passively and distribute, they're going to slowly get out. But generally speaking, when you see consolidation happen, that's probably because the consolidation is, people call it accumulation, right? Now, accumulation doesn't always mean adding new orders into the market as like fresh entries, but also exiting, right? So I'm assuming a lot of those buyers probably exited here as well. They at least took some of their position off, right? Because that's why we had this kind of sideways movement, because they were in the order book, as a bunch of sell limits, right? And any kind of big buyers you're seeing was probably them unloading some orders as well. But this was also at market close, so you're going to naturally get a lot of exiting as well. Time matters as well. Like if you're near the market close, when the market closes, you're going to get a rush of volume come into the market because everyone's getting the hell out. But trying to track like longer term buyers or sellers is very difficult. I wouldn't worry too much when it's like these longer term areas, like this one here. I wouldn't worry too much about whether they're still in the market or not. The reason this is going to hold up is because everyone else sees it as well. Other institutions have already seen it. Other people have seen it. They've already marked this area out. There's going to be interest if we come back into it. That's kind of the logic here. Now, if you're looking on the 1 minute on these small gaps and you're looking at scalping trades, like other scalpers, then yes, whether they're still in the market a few minutes into their trade does matter, right? Because they might defend their position if it comes back to it. So it does matter on time. But these longer term areas, don't worry too much whether these guys are still in the market. They may have exited here. They may have taken a bit off. They might have bought more. Very hard to tell because all their volume gets tied up with everyone else's and they get distributed through the book passively. It's very hard to track. Big guys on the scalping level are much easier to track, right? Much more easier to track. But I would still have these big areas on the chart because if we get there, there's a very high probability there's going to be a very good trade, right? Even if it doesn't extend, like when we got back here, right, to this area, even if it doesn't, okay, in this case, it did just, go almost back to the highs again. And we got a really nice move up. But even if it doesn't do that, even if it just goes up, as a pullback, like it did here, even if this happens, right, you can still, as a scalper, right, on the 1 minute chart, you can make a lot of money just from that little move because you're only looking for, reactions, quick reactions, right? That's still a 300-point move if you caught that as a scalper. Now that's all right. I wouldn't really call you a scalper anymore because you'll be holding for many hours, but you now know when we're there, I'm only looking to buy this market on that day, so you're looking for any opportunities to buy on the 1 minute chart because it's unlikely we're going to just break through this anytime soon. So it kind of sets you up a bias for the day, and then you're aligned to the right side of the market. So you're buying the dip. You're more aware of, that it's more likely going to go up than it is to go down. So you kind of got to put everything together at once. It's a bit, yeah. Unfortunately, there's no kind of just one situation, but again, you want to look at like kind of one setup that you like and just keep your eye. Don't try and trade every single setup because it's just too much. You'll confuse yourself. But look for one kind of setup you like. If you see it, jump in. Great. And yeah. Henny, yo, Sammy, does the DX Futures platform have a daily lockout feature? I can't keep blowing these accounts because of tilt. My mentor is cooked, no lie. I believe it doesn't. I don't think it does have a lockout feature, sadly. But we are, Ola Prime is coming out with Ninja Trader and Tradervate very soon. So again, I actually don't know if they have a lockout feature. I'll be real with you. I've never used Tradervate. I've used Ninja Trader before, but only briefly, only like to test it out. But so I don't know if it had a lockout. But if someone knows in the chat if either of them have a lockout, then yeah. But it's hard, man. I know what you mean. But you know what? The good thing though, Henny, is if you're at that stage where it's literally just over trading that's making you blow these accounts, you have no idea how close you are to becoming like a consistently good trader. That's like almost the last piece of the puzzle. Do you know what I mean? When you get to that stage where it's now just you're just having to control your emotions a bit and your mental state when you're trading, you're on the last kind of part of being you know, getting there. So you're a lot closer than you believe, because understanding the market and trading and becoming profitable, that's, you know, once you're there and you realize, okay, it's literally because I overtrade, then you're not that far. Trade of 8 has a lockout. Well, there you go, Mo. Perfect. Thank you, Mo. So yeah, we'll have Trade of 8 very soon. Very, very soon we're having it. My wealth charts are frozen, can't trade it. It would place a buy above 25,900. Let's have a look. Let's have a look. See 25,900. Oh, we just tested a point of control. We're finally there. Oh, we tested ages ago. I was just being slow. 900. Yeah, so right above the high. Very nice. Actually, let me see on the 15-minute what the footprint's looking, because sometimes the footprint can look clearer on the longer time frame. You can kind of see what's happening. And yeah, you can kind of see it clearly here. You would still be more inclined to, yeah, the sellers are just failing. Like every time they do come in, they're all trading at the bottom. You know, the sellers aren't really at the top of the candles. They're always at the bottom, kind of stuck. They keep trying and failing, trying and failing, trying and failing. So yeah, it doesn't look good to be a seller right now. The buyers are able to kind of, like they've given it a good go. You know, you can tell the sellers have been giving it a good go. They've been putting a lot of volume in, trying to get this market down. But the buyers have been able to always trade above them, always trade above them. Now, once you see that start switching, right, and we get a few candles where sellers are at the top of the candle and buyers are at the, sellers at the bottom of the candle or at the top, actually, it could be either way. And they're bearish candles and buyers are kind of now trapped at the top, and you get that a few more times. Then you can start seeing, all right, there's that momentum shift happening. And we could be looking at, you know, a bearish, potentially a bit of a bearish move. Let's see if you can see that. Pre-market is always a bit, you don't see it that well on pre-market. But if I go back to just remove where we had like a decent bearish move that wasn't pre-market. Yeah, like you see how like here, after a while, like here, sellers are still near the bottom of most candles, and then it started shifting. The majority of sell volume was now kind of above price, right? And the buy volume is now where we are below. Okay, and they're still trying it, but then you can see that shift kind of happen in where the volume is distributed, and now buyers are trapped always at the top. All right, it's not a lot, but nonetheless, and sellers are always below, always below. Little bit of a pullback here on the 15-minute, but then again, buyers are always trapped at the bottom. I mean, at the top, sorry. Right. So looking at like the 15-minute footprint can sometimes give you a bit more better structure. And then you can kind of see how that's starting to shift slowly, you know, as sellers are now more at the bottom, buyers are starting to get a bit higher. But this is, again, market close here and then pre-market, which is just shit. So, yeah. Thanks for that, Sammy. You're welcome. You're welcome. Tough while going through it. Could you please open gold 3-minute chart and draw fixed range volume profile from top to bottom and see there is a low volume node for short? All right, let's have a look at the gold. The one and only gold, gold, gold. Right. So, oh yeah, I drew it earlier. Already opened it. Yeah, so there's a low volume node right here on gold, right, from this push up. We haven't quite got it. I wouldn't short it on this load. I'll be looking to buy it, right? So if we dip back into this area, I'll be looking to buy. No different to this area here, right? It was a low volume node, right? Very easy to see. Heavier volume, a drop in volume, heavier volume, right? Big volume, small volume, big volume, okay? So as the market came back into it, I'll be looking to buy. I'm not looking to short. I will only look to short if we break that area, right? If the market did this, then I'll be looking to short, and I'll be looking to short here, right? If we broke through it, came back on the other side, then I'm looking to short the market. But we didn't get that, right? We just got a clear rejection. As long as we're trading above it, I'll look to buy, right? And then it created another low volume node. This was obviously not there at the time, right? This wasn't created. This was only created as we moved through it, right? And then it created another low volume node here. So now I am, again, for gold, I would look to buy if we get back into this area, which I think we will at some point. But I would only look to short if we break through it, come back. That's my short entry, right? Does that make sense, Mohi? But right now, in terms of gold, I mean, we're just at all-time highs, and trading all-time highs. There's no way. You've got nothing to draw your. You can only basically buy in an all-time high market. Does that make sense? Because there's nothing to the left of me where I could say, oh, here's a low volume node I can short off. Like there's nothing there, right? So you just kind of have to wait for these pullbacks to occur, and then you can potentially buy. And if it doesn't work out and it breaks through the node, then okay, yeah, now we've got a short potential. So you're kind of limited at when the market is in an all-time high, sadly, because you just have to wait until these pullbacks occur. And I wouldn't want to chase the market necessarily. Like I wouldn't want to buy here unless I got a huge stop and I'm like a position trader. That's different. But I wouldn't really want to buy here because there's a good chance it could come back and whatnot, right? Fatty, good to see you. That's the level I said before about the heat map showing resting orders there. Are you talking about gold, Charis? Sammy, see the exclamation mark at the top of your platform. I think that's a lockout option. Oh, yeah. For Project X, there's a lockout. Absolutely, there is. But we no longer offer Project X. This is just an old, like, while my account's being moved to NinjaTrader. But yeah, Project X has a lockout, but DX Futures is the platform we currently offer. I just don't want a DX Futures account. So I'm waiting for NinjaTrader. That apparently, doesn't have a lockout. Yeah, it sounds great. Buying the all-time high is much more advantageous using option call walls in GX. Yes, agreed. No, the 25,900 NQ, gotcha. NQ, let's have a look, 25,900. Yeah. So what were you saying about 25,900? Sorry, one moment. That's the level I said. Oh, okay, about the heat map. Yes. So there was like a ton of orders placed. Yeah, which I can imagine would line up as well, considering that was the point of control. And I think the heat map shows you previous ones, right? Like it shows you like ones that were executed. It's basically a heat map of the volume as well. So that's pretty cool. Which would line up, absolutely, because, there was a lot of activity here. Sam, for the newbie trader on futures, do you recommend to start on ES? Oh yeah, 100%. ES definitely. The ES is the most trader friendly thing ever because it's very slow. Oh my god, I've got all these old. I don't even remember drawing all this. When did I draw this? This is back. I must have drawn it at some point. I don't know. But yeah, I've got a bunch of old drawings here. Let me just clear all this. But yeah, the ES in terms of like the footprint and stuff, beautiful, beautiful footprint. Just because the volume is so large on the ES. Yeah, I'll leave it at auto. You got such a nice range in volume. I mean, these clusters are a bit small. I like to have a bit bigger clusters. Maybe 12. No, 12 is not good. 8. Yeah, that looks better. It's still a bit too big now, but you get the idea. It's got to be 4 then. Yeah, 4 looks all right. Yeah, it just ES has a better range of volume and it moves a lot calmer. It's not as quick, so it's a lot easier to kind of spot like, oh look, 1,000. All right, what happens if we get below the 1,000? Is there sell pressure coming in? See a little bit coming in. The iceberg, like the exact same thing happened on the NQ. I remember this area on the NQ. This was the 500 on the NQ. So I was actually in a buy. Yeah, this was where I was in a buy, and then I drew this out on the NQ as well because that was like 500. Here on the ES is over 1,000. So it's a little bit more like, oh, you can spot it. And then I got out like here, out of my buy. But it is generally an easier market to read, the ES, than it is the NQ, and it respects levels a bit better as well. Truth be told, like even the low volume nodes, they get respected a little bit better on the ES than they do on the NQ. The NQ can be a bit more whippy and kind of wick you out a bit more. Does the ES have a micro? Yeah. MES is the micro of the ES. So like even like the low volume nodes, like look at, that's a beautiful low volume node. I would expect definitely some kind of reaction there, even just blindlessly, just because of, oh, okay, I see why. It was a weekend gap. Friday, so that was a weekend gap, hence why there's a low volume node. All right. So you don't even need the volume profile for that. That's obviously a weekend gap. So yeah, it's going to have some kind of rejection. But yeah, the ES is just nice. And then like, so for a buy move, obviously, you're looking for kind of, the volume to be a bit more below and then push up and the volume dip. So like here is the kind of drop off in volume, right? Because we went up. So there was a lot of like buying happening and then gap through, right? And the drop off in volume, big drop off, right? So that would be like the nice area. We didn't quite get there, sadly. Oh, we did at some point, long time later, and it's still got respected enough for a good scalp, right? There's the 15-minute chart. That's still, a good. Okay, I forget the ES has got such little movement, but a 44 points. But you got to remember, each point is worth more on the ES than it is on the NQ, right? But yeah, the ES, the levels are respected very nicely on the ES. It's a great market to trade, but it is a bit boring. Like the NQ is just a bit more exciting, especially as a scalper. Like, but you're far less likely to blow accounts trading the ES than you are the NQ. And the Dow, I would honestly kind of avoid the Dow. The Dow is too mental. The Dow is, and the volume is so little on the Dow. Silver is out of control, plus 11%. 11%. What is silver? XAG or something, right? My God. This is literally a meme coin. This is mental. Holy crap. Look at that. I mean, I've never traded silver in my life, but boy, do I regret not buying silver last year and just holding it. I mean, how much? Look, even if you bought like early on last year, the average price was around $30 something. We're now trading at 100, and that's like 300% or something. That's insane. I swear it was 98 on Friday. Yeah, it was below 100 on Friday. There's the daily chart gapped up as well. That's insane, man. Well, that's worrying as well. When the metals perform like this, which they've never done, never this extreme, at least not in any recent time. That is a worry in terms of overall kind of for the economy, and it's usually going to be a worry. Gold more so than silver. Silver, I think, is literally down to the fact that there's actually like this is all paper silver, right? But the actual demand for the physical silver is extremely high, and the supply is extremely low right now. Like the physical silver, and China, as far as I'm aware, is like hoarding all the silver now. They're not exporting it anymore. They've like blocked all exports because silver is used for like everything, right? Silver is such a valuable metal in that respect. So I think this is mostly fundamental, driven. But gold as an inflation hedge and as a safe haven. The fact that gold as well has been rallying so heavy, essentially showing people are losing confidence in the dollar overall, and it's not just a little bit of losing confidence, a lot of confidence in the dollar. So, which would then, yeah, it doesn't look good, especially I would predict that there is some kind of crash happening at some point soon. There's going to be some kind of like a genuine crash, and I know I use the word crash a lot, but I mean a real crash. It's worrying. There's going to be something big happening. I don't know if it's going to be this year, next year, in 5 years, who knows? But at some point, I think there's going to be a big kind of genuine crash. I think the dollar's really going to be affected soon. Wow, Sammy, I trade the Dow and you just shamed me. You want to kick me in the teeth and finish the job. Apologies, Scott. Apologies. But it's true. The Dow is tough to trade. If you trade the Dow successfully, well done. Hats off to you, because that's impressive. The Dow is hard to trade though, man. Careful with silver. It's being traded with emotions at the moment, not technical analysis. That's dangerous. Yeah. Oh yeah, 100%. Like it's not any more technical analysis. People are just buying because of the fundamentals as well. And there's a lot of emotion in there. So yeah. A sell for silver futures. Thank you, Con.